Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We were glad you're here on a Tuesday afternoon. I am Cesar Delgado. I am your host for today's program. We were going to have a conversation about updating on the combine sales with Kurt Blades. We were watching the markets for farming equipments for this season in central U.S. Then we'll have a conversation about updating your commodity markets from Advanced Trading with Tony Dunk. We were discussing about the hog markets with Tony. Otherwise, this is your rural news sponsored by AgriGold in central Illinois. The biofuel industry is ramped up with the 45Z for next month after the holidays season in Washington, D.C. We were talking about that with Jeff Cooper on Thursday's show on the cooking oil are implemented in the U.S. airlines companies. And Cargill is closing in Empire, Kansas. This plant will be second one to be shut down because of production costs and cattle herd. It's shrinking nearly 50 years since 1952. The Illinois Farm Bureau annual meeting was held in Chicago on Saturday at the Westin Hotel in Chicago. The Illinois Farm Bureau was focused on the legislation like the Farm Bill and E15 for their legislation agenda for this year. This is your rural news. What happened in agricultural sponsored by AgriGold. We were coming back with Kurt Blades. We were going to have a couple of questions about the statistics for farming equipments for this post-harvest season in the Midwest. We were joining with Kurt Blades from EM. Welcome back to the show. We were glad to have you again.
Well, I'm happy to be here. Thanks for having me today.
Let's talk about equipment sales for this post-harvest season in the Midwest. Can you give us some update on sales from the retail store?
You bet. Well, for the last 30 years or so, the Association of Equipment Manufacturers has produced what we call the Tractor and Combine Report, where we track the sales of tractors and combines in various classes month over month and year to date. And this gives a really good indication of the overall market, the overall ag economy, but really gives a good indication of what's going on specifically in tractor sales. And when we report the October numbers for 2024, or even the November numbers for 2024, it's safe to say it's a little soft right now. The tractor market has been soft, as has the whole ag economy, and that kind of goes across the board on all classes. In fact, we're kind of down for the year, approaching 13-14%. On average, in some cases a little bit more, in some cases a little bit less, in tractors and combine sales. And that's a really good indication of the overall ag economy and sort of some malaise that exists out there. But really what it amounts to is that, there's a lot of storm clouds in the ag market. And oftentimes what happens is that when farmers are pinched a little bit, some of the first things that they do delay are equipment purchases. If you add to the fact that interest rates are kind of high, even though we're coming off of a very good harvest in most parts of the nation in the Midwest, the commodity prices are not particularly good. And then you add to it some of the uncertainty, global uncertainty around trade, Maybe the future of biofuels has some question marks. So there's just that kind of a general malaise that certainly existed before the election, and now after the election, we're beginning to see maybe some of those attitudes turn. But I don't know that it's going to save the ag equipment market in 2024 as we look forward.
What is performed with the commodities markets with corn and soybean futures? Kurt.
I mean, it looks like the corn and soybean futures, obviously, we've got some demand challenges. We're pretty good on supply, but we've got some demand challenges. And again, if you think about ethanol use, obviously that's a big driver of corn prices. Trade with China and other countries is a big driver of soybean prices, and both of those have some question marks around them. So that's sort of leading to some question marks about what that could look like. I do believe that those things will pass, along with some of the other hope that's coming with the new administration and attention around the food supply. In absence of a farm bill, that also adds to it as well. But having said that, I always remain optimistic that we will find ourselves this time next year with a completely different story around the tractors and combines.
Kurt. How is the demand for the equipment for this season? New and used?
It's in both cases, it's a little bit soft, and I think it's a little bit soft largely because of interest rate. If you think of farmers that are now planning for their planting of next year, they're already starting to tap out their purchases for soybean for seeds and for crop protection and even fertility. So those are things that those variable expenses have to happen regardless. And then after those needs are met, if there is some credit left over or the desire left over to maybe take advantage of some tax savings, that's where machines are falling in this particular year. So when talking with friends and colleagues in the farming space, I think they're putting the priority on the variable expenses this season, but still looking at those opportunities that do exist in the machines. I mean, I think we've seen this slowdown coming for a while. So, the manufacturers have been, kind of tempering their production to make sure it's meeting the demand. And the demand is just a little bit soft right now. I fully expect it to come back after the first of the year, or certainly the second half of 2025. But for right now, it's just a little bit soft.
Do you have any final thoughts or recap of our conversation about the summary of the quarter of the equipment sales?
Well, what I would say is, we're approaching the holiday season, and this is the time for us to, be thankful to be in an industry that feeds the world in a sustainable way. And it's really exciting that, there's lots of storm clouds in the ag market, whether it's related to global markets or biofuels or the lack of a farm bill or interest rates. But we also have it pretty good, and we're blessed to live in the greatest nation in the world that feeds the rest of the world. And so, what a privilege it is for us in the ag space to reflect this time of year of how good we have it. Yeah, we're in a downturn right now, but I fully expect that to be turned around. And I'm just so grateful to operate in an environment and a country where we have the ability to talk about machinery sales and look forward to the future where it just becomes even more bright.
Thanks, Kurt. I enjoyed our conversation for today's program.
Thank you.
This is Kurt Blades from on back roads of Illinois. We were coming back with Tony Dunker from Advanced Trading. This is your open numbers of the commodity market sponsored by Kyle Bumstead from Allendale Incorporated. December corn is up to 9 to 5 cents. Remember that December corn is expired on Friday. Corn futures are up at 4 to 6 cents. Soybean futures are up at 5 to 10 cents. Wheat futures are down at 5 to 4 cents. Let's go with livestock markets. How is the cattle markets and hogs markets for today's opening for this morning? Livestock markets is up except for lean hogs. Cattle futures are up at 4 to 6 cents. Feeder cattle are up for February cattle at 3 to 5 cents. Lean hogs are down at 5 to 4 cents. Crude oil are up at 3 to 5 cents per barrel. We were talking about the world supply and demand report on this afternoon. We were here with Tony Dunker from Advanced Trading in Quincy, Illinois. How are you today, Tony?
It's a good day, Caesar. The markets gave us a little excitement today, so that's all good.
Let's discuss this with the world supply and demand report on this afternoon. Could you tell our listeners about the report?
So in this report today, we really looked at the demand side of what's going on with our row crops, and it was some pretty good news. I mean, as what we were expecting, maybe the demand side on exports has been very outstanding for corn, and I think the market has been trying to tell us that with what basis and the spreads have been doing. And so when you take a look at the number of adjustments that they made today and lowering those ending stocks, it's all based off of the demand side of this equation right now. In January, on January 10th, we will have kind of the Super Bowl of reports when it comes to the year-end report, and they'll probably do some more adjusting on the yield side of that equation in that January crop report. But today's report reinforced the idea that we are selling this crop to the world, and that's what we needed to see. And I think the corn market, it liked it. It liked what it saw. And we've seen a nice 20+ cent rally in the last 10 days in the corn market, taking us to levels that we haven't really seen since June. So between basis improvement and the market improvement and the fact that most places had pretty good yields, it's pretty refreshing to see that.
How is the beans demand from Brazil for this morning? Tony.
Yeah, so I mean, with what we are seeing on the bean side of the equation, I know here locally, we've got very strong basis levels to try and get farmers to bring those beans to town. And I think the thing that producers need to remember, we will use these beans until the next Brazil crop comes along. And so we got to keep that in mind as we're doing our marketing. If Brazil weather continues like it is, it's pretty benign right now, and they're growing a good crop. And so I think that underlines the importance to the U.S. farmer that the beans need to be marketed early to take advantage of, the fact that we're kind of the supplier to the world right now as far as beans go. That'll change starting in January and February.
Tony, we are watching the markets for the demand is lower than previous purchases. What is your thoughts on it?
So, I mean, there's plenty of beans out there. And I think that's why we are struggling to get that $10 mark, to go above that right now. I feel like Brazil has been supplying the world, but right now it's our turn for a few months. And so, unless things change when we get into January, when we have policy changes, I think we have to take advantage of what the market is giving us at this point in time and listen to what the market is telling you.
How is the January beans for this afternoon?
We finished January beans higher, and I think you also go take a look at what your cash basis level is. And in most places on the river, or if it is a crush plant nearby, they're looking for beans right now. And so we finished over $10 in many places on cash beans. And with the bean yield that we had, that makes it feel a little bit better.
Now to tell the farmers are skeptical about the crop in Brazil for right now.
Here's what I have to say. It feels like we will have a record crop that comes out of Brazil. South American weather is pretty normal at this point. I mean, they can have a hiccup. It's like that June, July timeframe down there right now, and obviously December and January are really important in their growing season. But I feel like they are growing a crop and they will displace our products once theirs become available.
Is there anything else that would you like to tell the pork producers about premium risk with LRP insurance for right now?
Right now, using those LRP products is very beneficial. You're getting a nice subsidy to give yourself a floor, and it's leaving all of the upside open. And I would strongly encourage producers. They need to be looking out. I've been working on clear out to October of 25 using LRP, and I think that's something very prudent for that producer to be doing. That allows them to stay in this market if it continues to the upside, but it gives them downside coverage at profitable levels. And then certainly there are other things that you can do if the market continues to rally. But at this point in the game, I would strongly encourage them to have LRP or put options in place.
Do you have any final thoughts or recap of our conversation about the hogs markets and counting on the world supply and demand report?
So I would just reemphasize the fact that don't become complacent here. Whether you're a grain farmer or a livestock farmer, you're getting opportunities presented to you to do some marketing. Make sure that you are dialed in on this and, be ready for what's coming in the new year because
March feeder cattle dollar plus 2.55, closing at $257,450. February live cattle dollar plus 2.000, closing at $189.025. February lean hogs dollar minus 1.925, closing at $1.84.575. March corn plus 7 single quote 2, closing at $4.49 single quote 0. March soybeans plus 4 single quote 6, closing at $9.94 single quote 6. March Chicago wheat plus 3 single quote 0, closing at $5.61 single quote 6. March KC wheat plus 7 single quote 0, closing at $5.65 single quote 6. Closing quotes provided by Kyle Bumstead Branch Office Manager Erickson, Nebraska 308-708-7340. Allendale Incorporated. Thanks to our friends from Allendale Inc. Thanks to Kurt Blades and Tony Dunker from Advanced Trading. We're running time to our show, but you can listen on YouTube and when you get your podcast. This has been Back Roads of Illinois. I'm Cesar Delgado. You have a good day.